Hey, what's going on, guys? Sorry I've neglected this group on here. I assume most of you follow me on X. I'm mostly active on that. I think I've said that before, but sorry, it's been a few months. I post most of my content on there, and these um, are kind of a pain. I literally just tracked like 20 minutes of this, and my microphone wasn't on again. So, so because I'm an idiot, that's why I don't post as much on here. But sorry if you just follow me on here and it's been a while. I noticed these numbers have started popping off again. I don't know if Fubo is getting a little more attention online, but I figured I'd just post on here just to kind of go through some major updates going on for the stock. So we'll jump into it, considering I just did all this for the last 20 minutes. Overall, stock price has actually done pretty well. There was the usual sell off after Q3 earnings. Overall, I think it's holding pretty well. I think we had that bottoming out earlier this year around the $10, $20 range. And I think recently in the last couple of weeks it bottomed out around that $40 and has, in the last week or two moved up to the $50, $60 range. So it's actually looking pretty strong. I'd like to see this continue to move up to the end of the year. It's mid-November 2024 now. So to kind of, if we could hold this range and get up in the $70, $80 zone for the end of the year, that would look, really good going into the new year. And then, obviously we're still waiting. I think it's going to be suppressed a bit until we get some real movement on the lawsuit. But if it can hold this range and continue to go up, the lawsuit obviously can shift things aggressively in either direction. I do think they're positioned well, and they're looking good for a settlement. But we'll just have to wait and see. Hopefully, we'll get some movement on that in the next couple months. But that's kind of all I wanted to say on the stock price. Going into their Q3 earnings, I didn't post anything on here, but I did have some predictions on X that I posted. Overall, earnings were pretty good. I think really where they struggled was their dip in ad revenue year over year, and their subscriber numbers were, you know, for me personally, a lot weaker than what I expected. Overall top line revenue looked good. I think they were up 21% year over year. Subscribers, they were only up about 9% year over year. So that was where they were kind of weak. And then the ad revenue actually dropped. But one of the key areas I wanted to focus on, and part of why I think their top line was a little bit weaker was, I've said it in the past, but really their emphasis on profitability and really focusing on their bottom line growth during this time. So this is actually, I use Moomoo. This isn't sponsored or anything, but I use Moomoo to kind of look at some of their financials. This really gives back like 3 years, so you can see a pretty strong trend. But their free cash flow, if you look, historically Q2, Q3, Q4, each quarter gets better, and then you'll kind of get this negative drop in Q1 before it starts to get better. But they're really showing some solid improvement. They ended Q3 of 2024 just barely negative, but if you look at the prior trend, we should have a pretty strong positive free cash flow quarter in Q4. Unless they could play with the timing of some financials to just kind of push back their free cash flow date. We'll see, but they should be fairly positive, which is nice because I think they ended the quarter at around $153 million of cash on hand in Q3. So if they can start adding to that, and really gives them a solid runway where it, hopefully gets people away from the notion that they might dilute more or have concerns about their cash runway. I think that positions them pretty well going into 2025 if they can continue to make improvements there and see stronger profitability going forward. Obviously, if depending on the lawsuit, if they get favorable terms with Disney, some movement on where all that's going to go, that can have a huge impact. So I'm not going to talk too much about that because that can really just change the whole thing. But aside from all that, they're looking really strong. The fact that they're, pretty much free cash flow positive. Just looking at 2023, they, had basically like a $30+ million improvement. They could be positive 20 or 30 million for Q4. So we'll continue to track that, but that's, solid improvement in the right direction there. A couple other things I wanted to just point out on their earnings. Looking at their gross margin, for the longest time, the bearish scenario for them was the fact that they were had a negative gross margin. For the last year and a half now, they've been positive gross margin and just had their best quarter of 14% gross margin. So congrats to the team there. They honestly are doing a great job. Continuing to make improvements there. So, as they continue to kind of manage the business and see where things are going to look going forward, this is part of their emphasis on the bottom line improvements, driving positive free cash flow, seeing profitability. They're really making huge improvements here. So, it's going to take time until Wall Street obviously gives them their day, but the net margin's really, the true bottom line of how things are looking, but they're, everything's trending in the right direction. So I think we'll, 2025, they're on track to be positive free cash flow for the year, and they should see profitability. If not on a quarterly level, for the full year overall, they should be profitable, at least if they maintain the current trends. But going into some other, I don't think they're, the only thing I wanted to cover from X, if you follow me on X, hopefully you've joined some of these Spaces calls, but I do share these. We're going to try to do them about once a month. This last one, we had 162 people tune in. They're really good to just kind of raise questions, talk about the stock, what the company is doing overall. We've had a bunch of people join in so far, but it's been pretty well received. We, a lot of the Fubo bulls on X, it's a pretty good group that we can just kind of talk about a lot of these topics, concerns, anything overall, kind of what we're looking at for the business overall. But, feel free to join in there and join in on those calls. Couple major headlines. Just want to go through some major news items since it's been a little while. This is about a month old. The Athletic, which is a online news platform, I guess, for sports. I've never used it, but they have a pretty big following, from what it sounds like. So, and I believe you have to pay a subscription to see the content on The Athletic. So I think it's a good market where it is kind of a premium sports news platform that kind of fits in with Fubo. They're kind of a premium sports streamer. So it seems like a good target audience. I mean, we'll see how much impact it really has. I can't imagine it's going to be a crazy impact, but I mean, we'll see. It just kind of helps bolster their position in the market and brand awareness and things like that. So it could be pretty helpful to just, make some additional revenue, maybe by kind of putting some more content on The Athletic, but also being able to attract new subscribers. So that is pretty cool. It seems like a pretty good matchup overall. A couple weeks ago, and I follow pretty closely on X a lot of what people are posting about. A common thing was this Chicago sports network. It seemed like there was just a massive gap. Most of the people who follow a lot of the Chicago sports teams, I'm not a Chicago sports fan, but it seemed like there's a real gap in what people could watch. There wasn't a good platform to watch. I think people really just had to have antennas to watch a lot of the teams. So there was a period of a couple weeks maybe, or a month or more, where people couldn't get their Chicago sports. So, and I think part of it is Fubo's platform being pretty easy to work with and easy to integrate new sports onto it. They were able to reach an agreement to get Chicago Sports Network on Fubo, so that's good. And I've talked about it in the past, but the regional sports network seem to be a pretty strong point for Fubo, where they really have an edge. YouTube TV doesn't do anything with it. I saw recently Amazon Prime has started getting into that, so we'll kind of see what that means. The stock didn't really react, so I don't know how it really impacts over. I mean, we'll just have to see where Amazon goes with it, but I couldn't really get a gauge on where that's going to go so far. But overall, it's the fact that they are able to react, get people to get a platform where people can watch sports on pretty quickly is good to see, because I think a lot of these regional sports networks, the RSNs, are kind of struggling to where they're trying to offer their own apps and platforms where people can get their local sports teams, but for a lot of these RSNs, it's very expensive, it's costly, it's kind of a pain in the ass for them to offer their own standalone apps, which kind of goes into this next point. Is Fubo launches a standalone premium subscription service, so you don't need a base channel plan. They will start to offer what recently just became FanDuel Sports Network, which a lot of people know as Bally Sports Network. They'll start to offer standalone packages. So if Chicago Sports Network doesn't want to spend millions of dollars a year trying to maintain their own app and deal with issues on it, they can just point people say, hey, go to Fubo. It's I don't know, $30 a month. You can get all your sports there. Like, if that's all you want to watch, that's where you can get that. So could be a pretty solid market for Fubo to retain a lot of those customers that might just sign up for a month or two, or just do the week free trials. So I think it's a step in the right direction. I don't know that this has been fully rolled out into production for the market yet, but I think it's really a step. It's kind of them putting their money where their mouth is. They're suing Disney, Fox, and Warner Brothers over this thing, this whole bundling practice. So the fact that Fubo is actually separating these bundles and saying you shouldn't have to pay for all the stuff that you don't want to watch. You can if you just want your sports network, you can spend, $20-$30 a month. You can get just that and not pay, $100 a month if you don't want to watch all that stuff. So I think this is a nice step in the right direction. We'll have to see where the unbundling thing goes with Disney, but overall, I think it looks good. I think if Fubo has a pretty strong platform, they've made a ton of improvements. I use the product over the last, I think I've been using it about 3 years now. It's gotten a lot better. There's a lot more content on there. It just runs a lot smoother than it did when I first signed up. So I think if they can be the platform where these local sports networks can say, hey, we don't want to spend the money and have to deal with maintaining our own apps, we can just point people to Fubo. And, Fubo's not going to get the same amount of strong revenue on, a $30 plan versus a, $80 or $90 plan. But, if the margins are there, then, it's really going to add a lot to the bottom line. So that's just kind of my opinion there. Other thing I want to dig into real quick, I know this has been kind of long here, but their institutional ownership has been looking really good. They were around 35% on institutional ownership. They're really up into the mid-40s now, so there's been a ton of institutional buying. I know it's kind of lagging with a lot of these, but in the last week or so, there's been 20,000, 250,000, 100,000 call. 15. There's been a couple of these smaller ones reducing their positions, adding 100,000, adding 20,000, 11,000. This one, I don't believe that's a new one, the BlackRock one, but a lot of movement lately, which is showing pretty strongly where institutional ownership is going. It did bottom out around 35%, so the fact that it's going back up But just as a reminder, a lot of this can change just based off the market cap being in the, $500 million zone right now. If they can get, and a lot of it's up in the air of where this lawsuit goes, but if they can, see a settlement amount in the hundreds of millions or $1 billion, where Disney is, throwing in the towel on this, the JV for Venue Sports, Fubo can get a good cash settlement. They can, and I know like Gandler, he doesn't want to talk about it, about doing like a stock buyback or anything like that. But if, I don't think he wants to drive any hype around it. But if they're getting hundreds of $1 million or $1 billion in the settlement, I have to imagine they're going to do a buyback with their market cap so low. So, I mean, this is something where, we're sitting in the mid 40% zone of institutional ownership right now. This can easily double if they, threw $100 or $200 million into a stock buyback. So that's where I think, this is trading in the really low zone right now. I think that's where they can really, if there's movement on this lawsuit and they do a buyback, you can just see this thing go flying overnight. I believe in the company. I'm bullish on their direction so far. If you're following me here, I'm sure you're bullish too. But just kind of my thoughts on it. But like I said, if you made it this far, thanks for watching. Please like, subscribe, drop a comment, or follow me on X for more updates. But thanks for watching. Bye.